Hey, good afternoon, everybody, and welcome to Midday Market Update on this beautiful spring afternoon here in Freight Alley. It is, what is it, April 8th?
Thursday, April 8th.
Yeah.
We were here last show, earlier in the week, and you were gone. We had Andrew Cox filling in for you.
Yeah,
And
I was contemplating just giving up. Just I had the symptoms of COVID, I guess, after my second shot. I got my second shot on Monday, so I'm COVID strong now. But yeah, I got my butt kicked the next day. Pretty good.
Fully vaccinated co-host over here. We love to see it. Second shot symptoms worse than the first?
Yeah, absolutely. The first one was I really didn't know I had any symptoms until like the third day, and I woke up and felt really good and went, yeah, I was messed up yesterday a little bit.
Well, we're glad to have you back. As I said on Tuesday, Andrew Cox filled your seat, but he can never fill your shoes on our live and interactive show. We're up on LinkedIn right now. I've got you guys pulled up. So drop us a comment. Let us know that you're listening. We had people wishing you well when you were gone on Tuesday.
Oh, yeah. Is that right?
Of course. Rhonda
my mom?
Zimmerman. No, it was Rhonda. Rhonda
Rhonda's
always was,
sweet.
you know,
She's
she said, hey, tell Mike Vincent that we all say hi here.
All right. Well, thank you, Rhonda. Hi, Rhonda.
What have we got going today, Mike?
We got a lot of stuff going. We were just talking right before we went live. It's interesting because, you know, trucking, logistics, midday market update, and we're talking about electric vehicles. We're talking about autonomous vehicles. We're talking about IoT devices and maritime visibility, right, in the headlines. And we've got some really good guests on here today, too, as well. Drew Herpich, he's a CCO or Chief Commercial Officer at NTG. Mm-hmm. And then we've got Mr. Supply Chain, Daniel Stanton.
Mr. Supply Chain.
Yeah.
He's been on a couple of our shows, and he's done a pretty good job with all of us. And I think that we're going to be talking a little bit about supply chain recovery and kind of doing a health check-in about where our supply chain is and where it's going. And then after that, we've got our very own Mike Baudendistal, Intermodal Market Expert, going to be talking to us a little bit about what's going on the rails, right?
Yeah, I hope so. That's where he's an expert. So I'm going to ask him that, and hopefully he will. No, he will. So yeah, awesome stuff.
Good stuff going on. And you know what? Andrew Cox actually isn't here today, so it's like you guys.
You know why he's not here? He's getting his COVID shot. Yes.
We love to see it. So let's dive right into those first headlines.
Let's do it.
Starting off with a acquisition story we've got, right? John Kingston writes, Orbcomm, leading provider of ELDs and other IoT technology, is being acquired by private equity company GI Partners. Price for Orbcomm is $11.50 per share, which is a significant premium over its closing price Wednesday on the NASDAQ of $7.57 per share. The company's 52-week high is $9.25. That was recorded on January 21st. And it's roughly 52% premium over the current share price, is in the ballpark of about 50% premium over the 90-day volume-weighted average as well.
Yeah, right. So, on the company's fourth quarter 2020 conference call held in February, CEO Mark Eisenberg, he said that the company wasn't really considering M&A this year. Mm-hmm. In the out years, maybe, but not this year was the specific answer. But the question was really posed by the analyst as to Orbcomm acquiring other, being the acquirer or making acquisitions. So GI in San Francisco based. Is San Francisco based, is described itself as having raised $26 million and investing primarily in healthcare and IT and software. Mm-hmm. We'll have more on this developing story throughout the day, though. I mean, that's really all that was there. So we're digging into this to find out what is going on, where that takes Orbcomm from here. Orbcomm was the one, that had their name on the first rocket up and down, SpaceX.
Which is pretty awesome.
Yeah, it's pretty cool.
How do I get Kaylee Nix splashed across the next space?
Money.
A $1.1 billion deal, according to the John Kingston article.
Yeah, absolutely. Yeah, $1.1 billion. Forgot about that.
That's a lot of money.
Yeah, exactly. Yeah, it's a little bit of cash. That might get your name on there. I don't know. Maybe not. That was a few years ago when they did it. Yeah. So and HYLIION. Love HYLIION. Love Thomas Healy. HYLIION's in the news here. HYLIION gathers fleets to test natural gas electric hybrid from Alan Adler. So Alan Adler, the sell-off of the electric vehicle startup stocks has been as brutal as their frothy days of only a few months ago. HYLIION Holdings is one of the hardest hit young companies, but it is pushing ahead with its plans for natural gas electric hybrid truck capabilities of emitting less than net zero carbon. As Thomas Healy touts, it's less than net zero carbon. Its shares have fallen from its $55 high in public, right before it went public in October, to Wednesday at $10.86 a share. On Wednesday, HYLIION said it was created a Hypertruck Innovation Council of fleets, logistics, and transportation companies to test its prototype. So here's the thing. HYLIION doesn't make electric trucks, right? They make the powertrains that power them, right? So they're using a Peterbilt Model 579s for its Hypertruck test models, right? The future of hybrids is in question a little bit right now as you have industry focusing on zero-emission battery electric trucks, which is HYLIION has battery, but it charges through the liquid natural gas, or the renewable natural gas. So Kenworth, but people are moving on to fuel cells, et cetera. And Kenworth said it recently would halt its natural gas electric Class 8 T680 by the end of the year. And it's delivered 2 trucks for fleet testing. So they're kind of backing off a little bit. Some of the industry is.
And so if I remember right, the whole shtick behind HYLIION is that Thomas Healy is kind of planning on just putting in that powertrain, right? So it's not you have to throw away the whole truck and build a new truck, right? It's you just the one piece. So it's going to make it easier for conversion fleets.
It is. And it's better than hydrogen. It's better than some other ones because the infrastructure is already there. You can already get RNG at 700 local. The infrastructure for dispersing the RNG is already there. And the RNG is really powering the batteries that are running it, right?
Okay.
Which, if you remember, just recently they announced a new battery breakthrough technology with in partnership with Toshiba.
Yep. That was
1/20th the size of the batteries, 8 times more charges in 8 minutes, fully 8 minutes, that type of stuff.
Right.
Anyways, agility. So here's the thing: the Innovation Council includes Agility Logistics, American Natural Gas, Anheuser-Busch, Green Path Logistics, NFI Industries, Penske Trucking, Ruan Transportation Management Systems, Ryder Systems, Schneider National, Wegmans Food Markets, and Werner Enterprises. Not short of dropping names there. I mean, the people that are on this, that are behind them and testing this, are some pretty serious names that I don't think anybody's going, who is that?
I mean, I've got to say,
there's strong support behind this still.
Every time that we've had Thomas Healy on one of our shows, he really makes you believe in the product and what they've got going on at HYLIION. And I've got to say, it's pretty awesome to see big names like that. You said put their stock behind HYLIION like that. And you mentioned the whole negative carbon zero, like the less than carbon zero emissions, right? I'm going to put in a shameless plug for our Net Carbon Summit that's coming up in about 2 weeks, because I'm going to say that we will probably be hearing a lot about HYLIION and about what they're doing to make that negative carbon a thing.
Yeah, absolutely. And I think we're all very, very interested in that, in negative carbon. Hey, why go zero when you can go negative?
And it affects all of us.
Thomas Healy says this: now more than ever, fleets need efficient and affordable technologies that also address broader sustainability goals. Right? Our collective strengths will help HYLIION unlock the potential for electrification technology while advancing our customers, operations, and the industry at large. And I'm with it. With one of the largest dedicated fleets in the U.S., Anheuser-Busch is committed to leading the industrial industry towards zero emissions commercial transportations by improving the sustainability of our own logistics operations, said Angie Slaughter, Anheuser-Busch Vice President of Sustainability and Logistics Procurement. Have you ever spoken to Angie Slaughter?
I have not.
She's awesome. We've had her on the show a couple times.
I've also got to say, last thing about HYLIION, it's called a hypertruck. If you're a driver for a fleet, why would you not want to drive a hypertruck? Like, that's just the coolest name ever, right?
Maybe you're chill.
Drive a chill truck.
Yeah, exactly.
All right, what's next? We've got Too Simple making news again. It seems like they're in the news pretty much every week for us.
They're making news. They make a lot of news. I met someone from Too Simple at TPM in 2018, I believe it was, when they were just down in San Diego, just barely starting out doing some stuff, and they're just killing it. So, yeah, a $1.5 billion in IPO stock sale. Alan Adler. I always want to call him Alan Alda. Alan Adler reports again, an autonomous truck software maker, Too Simple, is looking to raise as much as $1.5 billion in its initial public offering of stock. In a filing with the Securities and Exchange Commission on Wednesday, the San Diego and Shanghai-based company said it would offer 38,851,350 shares at a maximum of $39 a share. Proceeds would be slightly more than $1.5 billion. The shares could sell for as little as $35, which would bring in about $1.36 billion. Too Simple expects that after paying fees, it would collect about $985.7 million for non-specific corporate use. The NASDAQ ticker symbol will be TSP.
So just a small amount of money is what we're talking about here.
Yeah. Yeah, just billions. So you might want to open up your offer to get your name on the side of that SpaceX rocket. There's a lot of money going in there.
There is a lot of money.
How about
in
the
that.
last one here, FOURKITES?
FOURKITES, another acquisition we've got. So FOURKITES is acquiring HYLIION, creating end-to-end platform for international open ocean shipping. This is what you were talking about, checking in on the maritime industry, right?
Yeah.
So Grace Sharkey, she writes that FOURKITES, a leader in real-time supply chain visibility, announced on Wednesday it has acquired HYLIION to create its visibility solution, Dynamic Ocean. HYLIION is an international ocean shipping, tracking, and documentation platform founded in 2014 to help build software for commodity producers and traders who were looking to save time managing their international logistics. And the company has raised $20.3 million in funding since its inception in 2014. FOURKITES Chief Executive Officer Matthew Ellenjekel, I think I said that right, discussed with FreightWaves the importance of the acquisition and how it will improve the customer experience. And he said that it was pretty important to kind of integrate this whole Dynamic Ocean with FOURKITES, right?
Oh, yeah, absolutely. We had Matt on right after they raised money.
Right.
Right? We had the raise. We had the announcement on the raise. We didn't have this. This just happened yesterday.
This just happened, yeah.
If we waited a week, we'd have nailed this today. Hey, rookies. But yeah, so what he's doing here, what they're doing here is it's documentation. And what he's saying here in a nutshell is that if you know where the container is, who cares if it's being delayed by all the documents and you don't know where the documents are in their process and so on and so forth. How you wait for 2-3 weeks for a document for your container sitting in, say, San Pedro Bay, only to find out that the documentation is what had it sitting on the ground for an extra week, right? So it ties in a very, very important part of it that people inside the industry, I'm sure, think about quite a bit. But outside of maritime and not thinking through all the 10 different parties that are involved when you're shipping something, how important it is to understand where those documents are, where they're getting hung up, and how you can move those and process those and get them through the system more efficiently and quicker to get your business. It's just a piece of paper that can delay your goods. And this gives them that visibility, which is, I agree with him. I think it's a tremendous
it seems like a no-brainer to me, right?
Yeah.
Like, why would you not want to invest in a platform and to have this visibility platform to figure out, like, hey, I just have this one piece of information that's holding me back from getting my goods to point A to point B. And if you can make that easier, why would you not want to deal with this?
Yeah, and I mean, they did their diligence here. I mean, one last point on this, not to beat a dead horse, but they talked to their customers, to find out where the issues were before they made this deal happen, and 70% of them said, well, their customers that they talked about, the document issue is a big place. Most said 70% of the time, my containers are getting stuck at the port because of the documents not being ready. So this solution is much needed.
The document should be the least of your worries, right?
Yeah, I was in maritime. It's a pain in the butt.
All of those headlines, understatement of the year. All of those headlines and more, you can be found at freightwaves.com. And we've got a look at the weather that's going on outside right now. We've got meteorologist Nick Austin on deck.
I do.
Nick, do you have any problems that you're foreseeing in the future for those folks out on the roads?
Well, actually, the weather today across most of the country, not going to be too bad, except for some wildfires still happening out in the southwest. It's just way too dry out there. But severe storms coming back to parts of the south, mainly for tomorrow and then again on Saturday. So that's pretty typical this time of the year. We're just about right in the middle of the primary severe storm season for the south. So it runs from March through May. So let's take a look at sonar critical events. Not much going on in the south right now. We have a few just kind of run-of-the-mill thunderstorms, some spots of heavy rain here and there. But taking a look at the critical events maps, I think the chances for severe storms are certainly going to go up across a fairly broad area for Friday, from Texas all the way over to Alabama and as far north as Little Rock and down to the Gulf Coast. So we'll see scattered areas of large hail. Drivers are going to certainly run into not only a lot of wet roads and just blinding rainfall at times, but also areas of dangerous thunderstorm winds. There could be some tornadoes that pop up here and there. So they really need to have those, whatever weather apps they use on their mobile devices, have them set to GPS or location mode. That way, those drivers will get warnings no matter where they go, because they'll be popping up for sure. Yesterday, across parts of the Mississippi Valley, Weather Service received about 60 reports of severe weather, mostly for winds, but there were a few tornadoes that popped up in northern Louisiana too. Now, heading into Saturday, the threat shifts a little bit to the south, and the area shrinks a little bit, but still there could be severe storms from Montgomery, Dothan, Alabama, down to Mobile and across a good chunk of the Florida Peninsula and into southern Georgia. So even heading into the weekend, things are looking maybe just a little bit hairy there for those parts of the country. But again, not a widespread tornado outbreak here, but there will be scattered severe storms across the region. So that's certainly going to be an issue for a lot of drivers heading into Friday, and for those weekend warriors that'll be out on the roads on Saturday too.
Thanks, Nick. So you've got a pretty cool article dropping on FreightWaves.com recently about a big decision that NOAA's made for a cool partnership. Tell us a little bit about that.
Well, it's the first time that they've done this. They signed an agreement with a private offshore wind developer. So this is kind of part of the Biden administration's plan to move towards a lot of more clean, renewable energy, create jobs, those sorts of things. So this is a first of a kind agreement for the U.S. government with a private developer like that. And it should create possibly in the long run tens of thousands of jobs. It's the company itself, which is named Ørsted. It's based in Denmark, but they have a North American office too. And they're already in the process of developing some offshore wind farms up off the coast of New England. So that's where NOAA's going to be able to share a lot of the data from this company. And Ørsted will be able to use a lot of NOAA's data that they have available as well. So we're talking about clean energy here, research, and all kinds of other benefits with creating jobs. So that article is up on the website right now, FreightWaves.com. So everyone go check it out.
Yeah, excellent stuff, excellent stuff. You know what else is coming up?
What?
Hurricane season.
Hurricane season is coming up, and I believe that Nick's going to tell us a little bit about what's to be expected coming up a little later in the show.
Awesome,
also.
awesome. I want to ask him later, have they ever said, hey, this season hurricanes are going to be down? Doesn't seem like that.
In my recent memory, I want to say maybe like the early 2010s, there were a couple years where...
Was it really?
Yeah, where NOAA was like, we're expecting an average to below average season. But it has seemed like in the recent, maybe 5-ish years that they have been pretty, I would say, bullish on their outlook for how many hurricanes. And it's lived up to the hype. Last year, we had a record number of named storms make landfall. I don't know if you remember, but we had to go 4 or 5 letters into the Greek alphabet for that one.
Yeah, we were, because we were talking to Nick testing our Greek alphabet knowledge. What's the next letter?
I can say the whole thing.
Every week it was like, which one's the next letter? Which one's the next letter?
That's my party trick. I can say the whole Greek alphabet.
Oh, all right. Okay. Well, we'll have to hear that on air sometime. Maybe on your new show.
Maybe.
There you go. There's your new show. So, hey, let's check out on the freight markets, right? We got Zach Strickland, our Sultan of Sonar. Let's check in with Zach.
Hey everyone. So tender rejection rates have now fallen under 26%. They're kind of bouncing around between that 25.3, 25.8 percentage range. This is, kind of a holding pattern for the market. We haven't been below 25% since February 17th. So if we do settle any further, that would be kind of that point of inflection where we start to think, okay, we're starting to see a little bit of a dynamic shift. That winter weather event that hit Texas and the central U.S. still has not cleared itself from the market in terms of overall impact. Now, we are going to start to watch reefer rejection rates and things like that for seasonal influences right now. We've been kind of disconnected from seasonality over the last little bit. Reefer rejection rates did jump back up over 46% here in the last couple of days. They do look like they might have, maybe turned back higher a little bit, but it doesn't look like they're really making a significant move just yet. But that will definitely be one to watch. 46%, still extremely high. Van tender rejection rates not making a huge move either. So they're not, that type of market is not necessarily seeing a lot of volatility right now. So looking out into the areas that we'd normally see produce movements this time of year, like Florida, reefer rejection rates super elevated. You're talking over 35%. Out of the Lakeland market right now. That is extraordinarily high for the Florida market. Agricultural produce rates for the USDA reporting over $1,600 a load right now, going from Orlando to Atlanta. So that is definitely going to be an area where we think that overall water level of the market is bringing the rates up. and they're going to also continue to keep pressure on rates. Now, looking into the future a little bit, something that is developing rather quickly is the import volumes. Import volumes are just booming right now. We're forecast to break through September's record level on the inbound ocean tender TEU index, I should say, and it's breaking it significantly. So that portends pretty well for the freight market and continued tightness into May and June. So definitely kind of probably a holding pattern in April, but the market is poised for a breakout yet again here in the next couple of months.
Thanks, Zach. And Mike Vincent, I've got an opinion question for you.
Okay.
He mentions that import surge that we're seeing once again. Do you think that surge is effective? It's been, 3-4 weeks since the last stimulus was issued? Do you think that has something to do with all the consumer spending finally hitting?
I would think so. Yeah, I think that's definitely it. Part of it. And I think production has been up as well, right? Even though Anthony Smith is very skeptical about it. Of course, we'll check in with him in a moment, see how skeptical he is about that. But yeah, stimulus package is going through the infrastructure spending bill. There's a lot of positivity. The economy has kind of got some positive movements to it, and we'll find out if there's more indication of that from Anthony, right?
Anthony, are you skeptical or optimistic today?
It's a bit of a mixed bag. So I do have some skepticism, and it's not going to be around production. I do know that we are producing more. There's manufacturing momentum building. Definitely skeptical about those pricing, but it's Thursday, so that means initial jobs claims got released, and we saw that there was an increase up to 774,000, I believe. So over 700,000. It might be right around that 740,000 mark. So we saw an upward movement for those weekly initial jobs claim numbers. And so looking at that upward movement, we see that there isn't that downward trend that we were expecting to see, but there is something to note that continuing claims are starting to move down. So that's a number of people looking to receive those initial jobs claims on a continual basis. The initial claims are those that are applying for the first time. Those continuing claims are those that continually to need assistance on a week-to-week basis. So that's starting to come down. So that shows that there is some longer-term downward movement overall, because we can't get too caught up in week-to-week movements. So there is some positivity there. The other thing, kind of piggybacking off of what Zach just mentioned, looking at the imports, we saw the trade deficit numbers come out, and it showed the largest trade deficit that we've seen to date. And so it's nearly a 5% increase, showing that the U.S. is consuming and essentially recovering a bit quickly compared to the rest of the world. And so when we're looking at that, it's going to show that we're consuming more goods, more products, and that's going to be an impact from that stimulus package, of course, but also maybe some downstream effects from those vaccine efforts that we've seen within the U.S. compared to the rest of the world.
Expect that, like you said, there's some effect from those vaccines, right? So do you expect that trend to reverse a little bit, or to drop that 5% gap in the import-export as the revenge entertainment type spending starts happening, maybe?
It's going to be iffy. It's just depending on whether or not we see the rest of the world, how they are able to recover. I do expect there to be somewhat of a rebound, and it's interesting. There's going to be a whole other segment, maybe even a whole other show. But when we see that increase in the deficit, that's going to have, in a weird effect, a decline on overall GDP, even though we're consuming more. It's a very strange measure in how it all works. But I do think there will be some slight rebound effect as we see the rest of the world kind of catch up as vaccine efforts get pushed through. But as of now, I do see that imports are going to stay elevated, that trade deficit is going to stay relatively high, and it's only a matter of time until we see other countries kind of catch up to our vaccine efforts and our benchmarks so far.
Excellent stuff, Anthony. I hope that the economy keeps going and keeps going strong, and I hope that people do get out and start spending more and traveling and getting on their airplanes and flying around and seeing more people, in person, like we will be here in November 8th through the 10th at F3.
You know what? Don't spoil the ending of the show. We always talk about it.
You can't spoil F3. It's the greatest thing on a planet. It's going to be.
It's huge.
The Coachella.
It's going to be massive.
It is.
So excited.
But Anthony, thank you so much, and we'll talk to you again on Tuesday, I believe. Let's get on with our first guest here. We have Drew Herpich, who is the CCO at Dolan Transportation Group at NTG. Drew, how are you today?
Good. How you doing today, Michael?
I'm doing great. I'm doing great. I have our co-host here, Kaylee next. Can you give us just a quick about yourself and NTG, and let's jump into this.
Yeah, absolutely. Drew Herpich. I'm the CCO over here at NTG. We're a full truckload brokerage here. Just the other day, we got ranked by Transport Topics as the number 12 largest brokerage. But we do everything from your dry van to your reefer, your expedited, final mile, and we have a large drayage network as well too.
Give it a slight round of applause for that number 12 ranking.
Yeah,
That's
number
awesome,
12
Drew.
ranking. Congratulations on that, Drew. That's awesome stuff. That's awesome. Let's jump into the big thing that's on everybody's mind, and I do mean big, by like 200,000 tons or something like that. What happens to freight, and what's the fallout when you stick a 200,000 ton ship across the Suez Canal sideways for almost a week?
Yeah, it's definitely been interesting to say the least. You think about just the capacity in general right now. There hasn't been a lot of slack in the industry, whether it be a weather event or a holiday, or to your point, a 1,000-foot ship getting stuck into the river. I think the biggest thing that we've seen about that, though, is the impact it's going to have in the next week, really, right?
Mm-hmm.
And so you think about when the ship got stuck; it was 7 days stuck there to March 30th. We, as in the U.S., truckload market, really won't see the effects really to next week, right? And so the one good thing I think it did a little bit was give the Eastern Seaboard a little bit of a relief over the last week. But I think next week we're going to see a big impact on the ports and this coming through. And to what Zach was kind of saying earlier, really should fuel the market as we go into the big season here, right? Not only do we have that event, the Chinese New Year is pushing things late, things that we're going to see from the International Road Check Week coming up here, and then also produce to start kicking. Could be kind of a perfect storm here as we go through the large portion of the year where a lot of things are kicking off from food and bev and manufacturing as well too.
So you mentioned the idea of a perfect storm. If I'm sitting in the United States and I'm watching these things happen event after event after event, coming from the Suez Canal, it's almost like I would picture it as like a tidal wave, right? Like you can see the wave coming out in the
Tsunami
distance.
warning.
A tsunami warning, and you know that eventually it's going to impact you. If I'm a US carrier right now, what does it look like for me? What should I be anticipating here in the next 7 to 10 days?
Yeah, I think it's one of those things where we're at the inflection point. You were talking about some of the stimulus, right? I think that's maybe kept some drivers off the road for a time period, right? But you look at it from a cost per mile perspective right now from a carrier, it's one of the highest it's been in years, right? And so I think that's why, over the last few months from the cost per mile being elevated, you've seen the large orders of Class 8 trucks, right? We saw that start really in October and November, and that's really continued into the early part of 2021 already this year, right? So I think the big thing is it's kind of a tale of two ends here, right? Obviously, the carriers are buying a lot of trucks, and supply will come back into the market eventually, right? There could be some delays from the chip shortage that we're seeing from semiconductors or from some of the manufacturing standpoint. At the same time, when does supply come in, and right? And that will be more in the back end of the year. But I think in the short term, this is a great time for carriers to really be able to capture some costs that they haven't over the last few years, right? And so it's definitely a carrier market right now. And I think the one things that they're trying to battle as much as possible is getting those drivers into the seat, right? From training programs being delayed, and things from an insurance standpoint, costs. And you think about some of the things from a Drug and Clearinghouse Act as well too. Carriers, from a large perspective, can't get drivers in the seat soon enough.
So, Drew, I want to ask you this about the state of the U.S. carrier is you talk about these, they're ordering capacity, they're trying to bring in capacity. It'll be later in the year when it gets here. There's shortages on semiconductors production. You've got what we call the salsa trucks being built by PACCAR, where you have trucks being built without chips in them, right? You're getting the salsa, no chips. And then when the chips come, they're going to put them back in the line and then put the chips in them. How long does this market stay as elevated as it is? Is this going to happen for years and for a couple of years? I mean, is it really that prudent to be buying up all this capacity, bringing on this new capacity that's going to be delayed for almost a year? Some saying 2022 into 2023 for some of this stuff to get in here, while you still have a shortage of drivers. Can you even seat the capacity? Is it going to get here after the crunch goes down a little bit, or is this just a new norm?
No, I think to your point, Michael, I think for the next 2 to 3 months, we're going to be in this cycle, right? Elevated rates. I think capacity is going to be tight. Any little event, like for example, like the Road Check Week coming up here May 4th, I think you're going to see some capacity crunches, right? And they usually will last for probably a week or two. I think after that July 4th period, though, we'll start to understand how this economy is really going to look, right? And so the one thing that we've seen is from the materials coming through, does that change, right? Think about a customer like, example, Coke and Pepsi. right? They were trying to get as many 12 packs into the household during the COVID period. Now they're going to be shifting to going to the stadiums and concerts and things like that, right? So I think after July 4th, we get through the produce, we get through that heavy time of manufacturing and, reefer season and everything like that. Then we start to see what the economy will look like when we go back to school and into retail season. I'm still bullish on supply coming back into the market eventually, right? Like I said, the Class A truck orders that we saw over the last 5 months have been some of the highest that we've seen over the last 7 years. So eventually supply is going to come back into the market. I do think one of the things I look at too as well, Michael, when you look at that cost per mile right now being 280, 275, some of the things that you're reading out there, that's hard for drivers to stay off the road, right? And so when they were getting those stimulus or unemployment checks, I heard from many carriers, hey, Drew, it's better for me to stay back at home. But when you start paying those elevated rates, more people come into the market. And so the one thing that I've always tried to explain to people, it's not a light switch, right? It's a faucet. The supply will come into the market slowly. But I do believe instead of, probably Q3, Q4 that we were kind of predicting, it might get pushed back a little bit to that start of 2022. But I do believe that the next cycle and supply coming back in will happen.
So, Drew, you mentioned that idea of the July 4th holiday kind of being that set inflection point as you move out of produce season and back into the back end of summer. But we were talking about the whole idea of the 75-day buying season last year, right, for the holiday season.
Yeah, that's right.
And the idea that it's going to be pushed back even further, say, I don't know, maybe just a rough estimate, like a 90-day buying season, 3-month, 4-month buying season. Is that going to kind of back up into that idea of this July 4th inflection point, in your opinion?
Yeah, I think it's one of those things that COVID's changed us for, the good or the worse, right? And I think it's even changed the transportation industry so much more, right? So you think about it, the one thing that we keep on hearing more and more is the long haul driver is kind of going away, right? You're seeing much more of a short haul impact. You're seeing a lot more sprinter vans and straight trucks and a lot of more e-commerce effect. And so I think the one thing that we're seeing from a consumer standpoint is we expect everything to get to us in a day now, right? I think we expect the same thing kind of on the freight cycle as well too, right? And so I think peak season will be a little bit more stretched out than it normally is, just because we've been going through this all year, right? We haven't stopped ordering the Skittles, right, to our household, right? Things like that. So I think it's going to be one of those things where it's going to be spread out a little bit more just because of how the e-commerce effect has really affected the long haul driver as well too.
Excellent. So real quick, what do you see are the biggest challenges ahead going into 2020, going through the rest of 2021 for the carriers? Is it getting enough capacity on the road to take advantage of these high prices?
Yeah, I think the biggest thing is getting, back to a little bit of a new norm, right? One thing I've talked to a lot of carriers about in general is, getting back into the training school, their drivers back and going. I think the big thing for them as well, too, like we talked about the Drug Clearinghouse Act and some of these insurance regulations and things that have really creeped up on them. We've really got to, help our drivers out, right? You hear about this huge infrastructure bill that's going to be going into place, right? The one thing that I want to make sure that everybody still remembers, the economy in U.S. would not be where it is today if our truck drivers didn't do what they did over the last year, right? And making sure that our goods were getting delivered to stores. So it's one of those things where I think we've really got to help them out when we go through some of these regulations and some of these things that are coming up on them. Because at the end of the day, too, we talk about these drivers out there. 3.5 million drivers are out there right now in the U.S. It's the largest job in America, and it's one that we've got to really protect and really start to help grow more and more.
Drivers are some of the least appreciated frontline workers. So thank you for pushing that point. We appreciate that. Drew, if people want to connect with you, learn more about NTG, where should we send them?
Yeah, absolutely. Love to go to ntgfreight.com. Love to hear more from anybody out there. And if you need anything from us, we'd love to hear from you.
Check out that 12th largest brokerage.
Yeah, do it.
Some good stuff
and hey, note to self, he likes Skittles.
Thanks, Drew. Have a good one.
I appreciate it, guys. Thanks for having me on today.
All right. So sounds like Drew kind of has a healthy outlook on the rest of 2021, right?
Should we talk where you're going with this? I know where you're going.
Yes, you can't call it like a health supply chain checkup without mentioning the word health at least once, right? So should we check in on the health of the supply chain? We've got a Mr. Supply Chain here.
Mr. Supply Chain, Daniel Stanton. Let's check out the health of the supply chain. Let's see what's going on, my friend. How are you, man?
I'm doing great, dude. How are you? And Kaylee, it's so good to meet you.
Good to meet you as well. I've watched you on a couple of shows, but it's great to finally chat with you.
Hey, what's that book you got over your shoulder?
I showed up without the cowboy hat this time.
Yeah, good. This one's a little more highbrow. This show's a little more highbrow.
Right, your class, no cowbell. Right?
That's right. We're classing
really
up the
where the
no cowbell. Yeah,
that's right. Now you never miss an opportunity to promote the goods.
Yeah,
man.
that doesn't say supply chain
so.
management for dummies, so I'm not allowed to buy that one, right?
That's it. That's that. But it's the old cover. The second edition is out, and it's got a ship and a bridge and some trains on the cover.
Oh, I'm still in I'm still in 101. I'm in the remedial course still, so I'll have to get some coursework done before I can go there.
I've got to steal. I think Kevin Hill has a copy of it on his desk. I'm gonna steal it and do some reading. Do some reading of my own after this show gets done. Daniel, thank you so much for joining us today. Let's talk a little bit about visibility. And we mentioned the whole idea of the health of the supply chain right now. If you're taking a broad look at the United States supply chain coming out into Q2, we've got vaccinations going on. How do you think the general health of our U.S. supply chain is?
It's chaos everywhere. And, for supply chain folks, I like to joke that we're used to being in the background and invisible and ignored when things are going well. And then, we're in the spotlight when stuff isn't working. Yeah. And it just feels like the last 12 months, we have always been in the spotlight. So we're getting, it's nice to get a little bit of attention. This year has probably been more than any of us really want. But in a lot of ways, it's good because it's bringing attention to a lot of the things that we know and we've been sort of advocating and fighting for a long time. And now people are really paying attention and understanding, the issues of managing inventory and having visibility to what's happening in your supply chain and doing risk management. All of that stuff, people suddenly understand why it's really essential to have as a part of your business.
Yeah, absolutely. Daniel, it reminds me of when I was running, sales teams, et cetera, in my 30 plus years in logistics, I would insist on going to see those customers that maybe left us or had complaints, right? Because I don't want to go out there and just hear how great we are all the time. And, the old thing in operations, if the phone's not ringing, that's really your best compliment you're ever going to get in logistics operations, right? There's this new thing, and I kind of liken it to when blockchain first came out. Hey, we've got problems. Well, blockchain, all right, or just get blockchain. Now it's control tower.
It'll fix the Suez Canal, right? That's all we need is blockchain. But if you can match that blockchain up with this new thing called a control tower and visibility, all is good, brother. That never happens, right? And isn't that right? Yeah, so there's, it's funny. I wrote a newsletter article about control towers and visibility yesterday. It's gotten a lot of attention and triggered some discussion. And the argument I was making is visibility can actually create a lot of problems if you're not thoughtful about how you go after it. And so, everybody loves the idea of having visibility and being able to see all the problems in your supply chain. Nobody thinks about the fact that once you can see that problem, somebody needs to go fix it.
Yeah.
Right. And somebody may be sort of in an awkward position if that problem has been there for a while and they didn't know about it. Right. They didn't understand that was there. Yeah. And so it isn't always like rainbows and unicorns. But sort of the big picture view on it that I have is, when you think about any organization in the supply. And by the way, this ties back to what Drew was talking about with the big trucking companies as well. You can think about sort of three really high level things you have to do. One of them is planning, trying to anticipate what's going to happen in the future. One of them is execution. How do you actually do stuff day to day based on the resources and constraints that you have? And then the third one is visibility, right? How do you see what's really happening? And in most organizations, those functions happen kind of independently. And a lot of times we actually have totally different information systems to do each one, right? We may have, one system for transportation planning, another one for transportation execution, and a different one for transportation visibility. Same thing happens with inventory. Same thing happens with procurement. Well, what we're starting to see is that if you can bring those three together, the planning, the execution, and the visibility, you're just able to be a lot more agile, to make better decisions. And that's really the goal with creating these control towers, right? And so, the good news is we're getting closer. The bad news, like you say, though, is every vendor now has a control tower solution, and none of them are an off-the-shelf plug-and-play sort of thing. You still have to understand what's happening in your company, what's the information that's important to you, how do you tie those systems together.
So, Daniel, big events like the pandemic or the Suez blockage, those really do a good job of exposing weaknesses, right? And exposing the holes that exist. And as a person, you never like being told, hey, you've been doing this job, but here's the problem that you've been doing with this job for the last X amount of time, right? That never feels very good. And sometimes I kind of look at the state of the U.S. supply chain and feel like the response that we got was kind of that, like, you feel burned because it was told, hey, this doesn't work. In your opinion, if you were looking at that planning, that execution, or that visibility aspect of the U.S. supply chain, where do you think the biggest shortfall was during the pandemic?
Oh, ouch. So first of all, I actually think supply chains work pretty well, right? You know, it is folly to think that you can ever make a supply chain that will be prepared for any kind of disruption and be completely resilient. You just can't. That's not possible with money or technology. I will say, for the past 10 or 20 years, it's been really easy to get the C-suite to invest in planning and execution capabilities, right? And that's where, like, if you think about focus on forecasting or lean Toyota production system stuff, or even a lot of the AI stuff, it's all around planning and execution. Visibility, it's like, yeah, you know, we'd like to be able to see it, and, you know, Amazon and FedEx do that, but it costs a lot of money, and I don't really see how they're going to improve the profit margin, improve the customer experience. It's like, yeah, we know we need to do that, but it's not at the top of the list. Let's put that off for another year. Everything flipped in 2020 and 2021. Folks that hadn't made the investment in visibility really came up short, and the executives were frankly embarrassed if you couldn't answer questions like, there's a ship stuck in the Suez Canal. How does that affect us? And so now everybody wants it, but now it's like it's a scramble to put visibility in place, and it's more about covering our assets than necessarily really understanding that, you know, we have to do it in a way that we're integrating with planning and execution to make the whole cycle better. Does that make sense, Kaylee?
That's the best answer I could have expected out of that question. Thank
it's
you.
Awesome. It's like, hey, we need some water inside the house. So I'll go get the hose and turn it on, and then figure out what to do with it.
And I'm not just going to turn the hose on. I'm going to shoot it through the kitchen window.
Yeah, full bore.
I'm going to shoot it through the kitchen window because you need water in the shower.
Yeah,
right?
that's exactly
just
right.
like that.
Yeah, just like that. Exactly. So, Dr. Stanton, what's the solution here? You know, visibility is a diagnosis. We need better visibility, but we need it planned correctly. Everybody's going out to get visibility. Everybody's taking this new supplement of visibility. They're on board. They want it, but they need to plan on how to use it. Is it that you turn it on slowly and kind of figure out that planning and execution with it, or do you prioritize those areas where you need that visibility and coordinate those efforts with that? Or is it that you really have to first make sure you've got homogeneous data, because there's the other issue too, right? You got siloed data that may not jive with each other.
That's right. You know, like, so the answer, and this is, you know, probably not a happy answer, right? On the one hand, you'd say, oh, well, we just need to prioritize it and, you know, make strategic investments and pull this stuff in, and everything will be good. The reality, I think, is you've got to be a little bit opportunistic, right? If there's something going on right now that's going to make it easier to justify the investment in getting visibility to some part or parts of your supply chain, or if you're making decisions on making changes, implementing new software, and you can throw the visibility in as a part of it, just do it. Get what you can. But over time, I mean, where it needs to evolve to is where we have visibility to all of our supply chain processes. We're able to tie all of it together. We're able to pull in data like the stuff that you guys are talking about with, you know, hurricanes and shipwrecks and chip shortages. Right, we need to be able to pull all of that together in a useful way, but we can't do it all at once. The thing that I would caution people, though, is as you start to pull that visibility in, and especially as you start to integrate pieces from different silos in your supply chain, you've got to be ready for the fact that this is going to reveal issues that have been literally hidden from your organization. Mm-hmm. They're going to need to be resolved. That's going to take work, and it's going to take collaboration. And so it's almost like as you stand up a control tower, you need to have somebody in the organization that understands what to do with that information, is empowered to take action with it, and has the bandwidth to do it. You can't just like throw dealing with that information and those insights on top of all of the work that people are already doing, because they just don't have the capacity to do anything. And it's really a problem when you say, oh, we've flagged this huge issue. It's going to take collaboration from a bunch of different departments in the organization. Nobody really knows how to fix it or has time to do it. But now we know that it's there. And so we're going to be held accountable, and somebody's going to be asking us, hey, you told us last quarter you found this problem. Where are we at with that?
So it sounds like the prescription is in your people. And honestly, I'm going to write any of our viewers a prescription to go and check out the book that's hanging over your shoulder. Daniel, if people want to connect with you and get some of your wise wisdom on a regular basis, where should they go?
Absolutely. LinkedIn is where I'm most active. Can also follow me on Twitter. And the other thing I was going to throw out, my course on LinkedIn Learning about implementing supply chain management.
Yeah, please do. We're going to have a link. We're going to have a link to that out for you. We're going to put that link out on social.
That's right. We're celebrating this week. We had 100,000 people that have taken that course. So for FreightWaves TV viewers, we're going to put out a link to take the course for free.
Amazing. That's awesome. Get on that deal for sure. Thank you so much, Daniel.
Thank you, guys. Take care. Appreciate it.
Thanks, Daniel. Always good stuff. I could talk to him forever.
I know.
Very insightful, very entertaining. I'll be taking the course.
I'm going to have to take the course. I'm going to do, like I said, I'm going to steal a book from Kevin Hill's desk and then go take a supply chain course.
There you go. Yeah, he's got, supply chain for dummies or whatever he is on there. Yeah. Excellent stuff. Hey, let's check in with Mike Baudendistal and check on the health of the intermodal and rail. What's going on there? Hey, Mike, how are you?
Hey, good. How are you guys?
We're doing great, brother. Where are you calling in from?
Dallas.
All right. So, all right. Yeah. Oh, that's right. You're back in Texas now. Yeah, excellent stuff.
Lone Star State. Mike, thank you for joining us today. Let's see. Our big question, of course, the state of intermodal freight. You were on a couple shows this week, I believe, and talking more about kind of the intermodal rail markets. What's going on? What impacts are we seeing right now?
So we're seeing lots of volume. We're seeing volume that's higher, of course, way higher than 2020. We're lapping a period of weakness last year, but also higher, at this time of the year in 2019 and 2018. So there's plenty of freight, and really that's been driven by an elevated level of imports, particularly coming in through the West Coast, and then also the very strong truckload market. So we are seeing some spillover, there towards intermodal as somewhat of a relief valve for the capacity tightness, but that can only be done on certain long haul, high density lanes. And really the biggest challenge has been congestion at the West Coast. And in addition to congestion at the West Coast, the balance issues that are taking place throughout the North American network.
Yeah, so volumes have rebounded. We had some problems, obviously, through the pandemic and drop in volumes, but they started rebounding over the summer, I suppose. But they're in good shape right now. How is the export import affecting this particular vertical of surface transportation?
So the imports are way up year over year, and that's been a big driver, particularly of the international container volume. I mean, also the domestic container volume as well. Some of that imported freight is transloaded into domestic, containers, but that's really been sort of the biggest driver. We look over the past week, international intermodal is up 18%, and domestic intermodal is up 11%. What you're looking at there is total intermodal containers, and you can see that above the past 3 years, including above 2018 at this time, and maybe to think of 2018 as being a very strong year for freight demand. So that's really been the biggest driver, has been the elevated level of imports, and expecting that to continue as retailers look to replenish shelves. That there shows the international on the left, and that's actually been the bigger variant year over year. You think of last year at this time, there was the drop in imported containers. Here it's much higher than it was last year. So you're looking at international containers on the left up 18% year over year. On the right, domestic containers up 11% year over year, which that has more to do with the tight truckload market helping those volumes. And then you also see there in that chart the different patterns. I mean, you think of international and domestic as being two distinct segments, and last year it took a long time for international container volumes to start recovering. It really wasn't until sort of July into August, whereas the domestic volumes really started picking up in June, just sort of slightly after the truckload market started accelerating.
Mike, talk to us a little bit about those imbalances and the idea of containers either returning to LA empty instead of loaded, and kind of what that means.
Yeah, it's been a huge issue. There's a global shortage of the international containers. So those are the containers that go overseas on the shipping lines. And because there's been a container shortage, and because lanes are so imbalanced, the container ship companies want to get those empty containers back as quickly as possible. They make all their money on the head haul. They make a little bit on the back haul, but it's really not as impactful as having loaded containers on the head haul. So what you're looking at there in that chart is empty containers headed inbound to Los Angeles in blue, and loaded containers heading inbound to Los Angeles in orange. And in great contrast to where we were a year ago, the empty volume heading to Los Angeles is above the loaded volume. So most of those international containers, so those are 20-foot and 40-foot containers, are heading into Los Angeles empty. And the reason for that is the container ship companies want those containers to be back faster, so they can get those containers back to China and fill them up with more goods that are going to be destined for U.S. Consumption centers. So that's really created an issue for exporters. And it's created an issue for exporters because some of those containers on the backhaul, they will be filled with certain export products, such as export grain. So that's really eliminated a possibility for some exporters to get their goods to market.
So what you're saying is those container owners are calling the empties back in lieu of loadeds to get with the Chinese trade back to the United States and enjoy those margins. Is that right?
Yeah, exactly. So they're giving up some revenue on backhaul by loading up the containers on the backhaul in order to get those goods to market quickly.
Gotcha. Let's bring up the last chart here, the intermodal rates and the spots. Can you speak to this a little bit? Tell us what's going on here with the higher year-over-year spot rates.
Sure. So these are the 11 densest lanes for domestic intermodal. So these are 53-foot containers, and when you look at those on a year-over-year basis, they're all in the green. They're all well higher year-over-year. And some of the pattern here that stands out is the rates, outbound from Los Angeles, like Los Angeles to Atlanta, up over 100% year over year. LA to Dallas up 58% year over year. LA to Chicago up 33% year over year. And some of those rates, even on an absolute basis, LA to Atlanta close to $3 a mile, including fuel surcharges. Mm-hmm. Really, that speaks to the congestion in the West Coast. It speaks to that imbalance that I was talking about before, because going eastbound from Los Angeles is always the head haul route, but that's even more true, recently, with some of those imbalances and with, retailers and shippers wanting to get the goods to market quickly. That's the fastest route from China to a U.S. consumption center is through the Pacific Ocean, through the West Coast ports. And so that's part of what created that logjam on the West Coast with all the ships that were waiting is shippers wanted to get the goods to market quickly. And then, on the backhaul, you look at some of those rates on that same chart, Dallas to Atlanta, only 85 cents a mile, including fuel surcharges. So, going back to the West Coast, the intermodal rates are way below what they would be on the highway. So it's really created kind of an interesting dynamic for domestic intermodal as well as international.
So, Mike, we're running a little bit short on time on our show, but you are so chock full of great information that you're about to start your own FreightWave show. Give us a quick little shakedown of what the stockout is, when it's coming to air, and what people can expect from you.
So the stockout airs every Friday, and it is a podcast and show focused on the CPG industry. So container packaged goods. That's beer, wine, food, cosmetics, cleaning products. Things we buy again and again. And the focus is going to be on the supply chain of those companies, which has been a big deal in the past year with so many stockouts and so forth. So I also have a newsletter. You can sign up for it by freightwaves.com/the stockout.
Awesome. We're looking forward to that starting.
Thank you, Michael.
Great. Thank you.
Have a great day. Shall we check in with weather with Nick Austin again?
One quick little check-in about what's upcoming for hurricane season, Nick?
Yeah, let's do it. What's going on, Nick?
Let's do it. Why not? Hey, we're getting close. And the first kind of official outlook for the season just came out earlier today. It's from the folks at Colorado State University at their tropical meteorology program. They're a bunch of great folks. They've been issuing this outlook for decades. And they're usually pretty good at it, too. They have a lot of experience. So what they're saying for this season is that we're going to see another above average season, but it probably won't be nearly as bad as last season because we're kind of getting out of that La Nina right now. And during La Nina, often you can see a lot of tropical storms and hurricanes in the Atlantic. We're heading more of in a neutral period. We're probably not going to hit an El Nino, at least not a strong one, at any point this summer during hurricane season, which is actually good because El Nino, we would really want that actually because that kind of reduces wind shear. But since we're in that neutral period, we're kind of going to have maybe just a little bit of above average. They're saying 17 named storms. The average is about 12 with 8 hurricanes and probably they're saying 4 major hurricanes. Last year we had 6, so that's an improvement. And we had 30, as Kaylee mentioned earlier, a record number, 30 named storms last season. So they're only saying 17. Now, they're going to adjust that again in June. So we'll see what happens as the season really starts to get kicked off. So far, we haven't had anything happening in the Atlantic as far as any tropical cyclones. Officially, the season starts on June 1st, but we know based on last year, 2005, other big seasons that they can develop before June 1st. And they can also develop after the end of the season officially, which is November 30th. So we'll see how it all pans out, but it looks like it'll be just a little bit above average. We could see at least one major hurricane making landfall in the continental U.S., but exactly where that happens, they just can't tell right now. So we'll just certainly be watching things closely here.
Seems like we just ended the 2020 hurricane season, and now we're already talking about the 2021 summer hurricane season. We still have, just about a month and a half, month and 3/4 until that officially hits. So make your plans now. Now is the time to prepare for that extended overactive season. Again, if 2020 taught you anything, take your shortfalls and put them in place to expect a 2021 active season.
Yeah, if you're in a hurricane zone, always be prepared. Mm-hmm. I learned that quickly. I moved to South Florida years ago, and I arrived about a week before Floyd showed up, if you remember Floyd. Yep. It never did. I don't think it made landfall, but it came right up to Miami. It was about 600 miles across, and it was like a Category 27. It was unbelievable. Scary monster.
Category 27. I don't know if you're going to be working for the National Hurricane Center anytime soon with that one.
I am not a meteorologist, but it was a
fine.
Big bad one. It would have been rough if it came in, but it didn't.
You know what you are,
last
though?
year there we got hit by 5.
Yeah, that was a lot last year.
No, the last year I was there, 2004. I came here.
2004.
Yeah, I moved here in 2005. 2004 we had 5.
Yeah, you got out just in time. You know what? You may not be a meteorologist, but you are the co-host of What the Truck. Tell us what's going on tomorrow.
Yeah, so tomorrow we're back on our regular schedule. Yesterday we were with the summit, the Enterprise Fleet Summit, which was really good. You can catch all that stuff on FreightWaves.com and FreightWaves TV. Catch all that content. It was really good and interesting yesterday, for sure, certain. Tomorrow we're back on a regular schedule, and tomorrow we have Eric Rempel, Chief Innovative Officer, and Michael Reed, Chief Product Officer at Redwood Logistics, on with us. We got Josh Ashbury, Vice President of HubTran, and Leo Gorodinsky, CTO of Alvies, and Mike Baudendistal will be on with us again to talk more. I can't wait to ask him some more questions because I'm interested in understanding where intermodal is going to go as you have this shift from Asia to the West Coast and Asia to the East Coast. You kind of got this shift of where things are coming from, which are interesting.
Hopefully he's got a little bit more time. And we talked about that Enterprise Fleet Summit yesterday. Summit's coming up for the rest of April on the 22nd and the 30th. Stay tuned. We're going to have all of those here.